So we've heard from quite a few of the banks, both in the UK, where you specialize, and Europe, and the US for that matter. What are the main takeaways in terms of the health of the industry for you?
I think on investment banking, there's a real struggle for the banks to generate this revenue they need. And so I think what we're going to see over the next 3-6 months is a further announcements around restructuring of businesses, because the returns on equity just aren't there for some of these businesses.
So they've got to cut costs in order to make up for that loss in revenue.
Correct. So this is what you're seeing. You're seeing these revenues fall away, so therefore they have to cut their people costs, their IT costs. But this is in the face of course, enormous investment that's required in order to meet all these regulatory requirements that have been thrown at the industry.
Right, so it's not just the poor economy and the slow growth that's weighing on them, it's these regulatory requirements they've got to measure up to. The job losses, are those going to increase in the next 3 to 6 months? Is that what you're saying?
I think our research shows that the returns will be lower, the cost pressures will be significant, and all that means is that further job losses, I think, are likely across the industry.
And is this the main thrust of the advice that you're giving to the banks that you advise?
What we're doing is we're saying to the banks is you have to take a look at each individual business and work out how you're going to generate the returns for your shareholders. So that's really what we're doing, and there are a whole bunch of consequences.
And when it comes to the division of banks, one of the things that we've seen with the U.S. is that the investment banks are doing really poorly.
Yes.
But those banks that have a big retail arm, that's been their saving grace, ironically.
Yes.
That was the bit that used to weigh on earnings.
Yes.
Is that a similar picture in the U.K.?
I think we're seeing reasonably good results across retail banking. The question for the industry is, as they start to disaggregate between the investment banks and the retail banks, it means there's much greater transparency on the results of the retail banks. And I think there's going to be some challenges over the next few years about whether the UK retail banking market continue to offer things like free bank accounts.
We also still, of course, await whether or not they're going to be split off or ring-fenced, or how the government's going to deal with that question. When it comes to generating more revenue, you've talked about retail banking. You can perhaps charge for a bank account.
Yes.
But on the investment banking side, I mean, when are we going to see a return to investment banking?
This is about confidence. This is about, will investors want to invest in new transactions, whether organisations want to enter into mergers and acquisitions, and until we restore confidence in the world economy, that business is going to be a very difficult one.
It's not going to be coming back.
Yes, indeed.
Now, when it comes to European banks and these new requirements, they've got to recapitalize, they've got to get to this 9% Tier 1 capital ratio by the summer. What does that mean for the UK? Does that give the UK banks a bit of an advantage?
I think the UK is reasonably well capitalised. So I think what we're going to see is just to continue focused on the operating model for these businesses. And I think in Europe you're going to see really harsh management of their risk-weighted assets down.
Okay, we're going to have to leave it there. Kevin Burrowes, head of UK banking at PricewaterhouseCoopers Financial Services Consulting. Thanks so much.
Thank you.